What's up, investors? It is the 3rd, August 3rd, and I'll tell you what's up. The market's so is my account all-time high. I want to record it real quick before I go about my business today. But it's crazy that it seems like I've been reading up on the news cycle, and it's been extremely negative. And all the data, everything from A to Z, including like reports, the takes on the positive earnings reports are negative. So, and it's strange that, sorry, I already showed you the account, but it's strange that the stocks are rallying so hard on these negative news. I think either they're numb to it, or they just kind of like this one rally before a bigger drop. I don't know. But I'm trying to be on the defensive, considering we've ran up so high so fast. But anyways, I'm recording the all-time high today. I'll take it through the account. I'm sitting at 206 and 400. Show the positions, and it looks like I made a good play on PayPal here. All these options are going to be expiring. I'm just going to scroll quickly through them, and you can pause the video at any moment to try to figure out the exact positions. All the information's in this box right here. These are the equities. Apple was up 3.77. Well, actually, the market's still going, so things are still ticking around another 30 minutes in the markets. This is a rare widescreen video right here. Realty income's actually in the negative. It started dipping off towards the end of the days. Everything is dipping a little bit, but not that hard. Main Street Capital up 1.12 at the moment. Goldman Sachs almost up 2%. Paramount over 2%, which is good. And Smith & Wesson 3.42. These two have been on the tear, and I like that. I really do, because these are positions I need to be exiting, and Paramount still got some work to do. Sitting at 25, I need it to be up another $5, and Smith & Wesson needs to be over 15 by the 19th, I think. No, by 9/16, by September 16th, it needs to be over 15, and it's getting close. I don't know. It feels pretty dangerous at these levels, actually. And I've been trying to collect some cash, but I'm having a hard time to find places to trim. I sold 10 Apple shares and like 5 Goldman Sachs shares, and that's it. Maybe I sold like one call option against Realty Income, which I rarely do, and that's been the move. So here's the account, investing tab, on an all-time low, I think, when it comes to margin this year. 16.21%, multiply that by 2, that's 32.42. And this is the account sorted by equity. Apple is by far the greatest position right now. I will be exiting some of that, but I really want to exit next year after holiday earnings. I don't want to exit before then. But if it keeps running up, past 170, I'm gonna have to trim the position and look for a pullback later this year, which may not happen, but such is life. Main Street Capital, Paramount, number 3. Based on total return, we got Apple, Main Street, Realty Income. My 3 longest held positions in the account so far. Okay, so that's the account. Let's do some relative performance. Okay, so I've been crushing the market lately, and this continues today, up 3.67. And then 1 week performance is 5%, 1 month 20%. It's insane. I didn't realize it was that high in the month. So 3 months is 15.62. 1 year is 22.87, and I think the S&P is still negative on the 1 year, so it should be interesting to see that comparison. All right, so we got 3.7, 5, 20, 15, 22. Okay. 3.7 versus 1.7, so 2% higher than S&P. 3.27, so only about 1.5% higher in like 1 week. On 1 month, like 20%, so 9% higher on the 1 month. 3 months, this is completely flat, and so I'm winning by 10% or something. on the 1 year, the S&P is negative 5.34, whereas I am plus 22.91, so 28% over the market. Someone suggested once in the comments that they thought it was unfair. Can you imagine this? They thought it was unfair that I was comparing myself to the S&P 500, and they thought I should compare myself to a leverage fund. All right, let's take a look. Let's take a look at the an S&P short fund. SPXU. I don't know which one is short levered. So hold on, I'm sorry. Double X leveraged. Not short leveraged. Leveraged. Okay. S&P. One sec. We gotta find this. S&P leverage, but I don't want a 3x bull. I want a 2x bull. SPUU. There you go. Daily S&P 500 bull 2x ETF. So it was about 20% of the year. Boom, down 15. So it's actually 10% worse than the S&P 500. So that would make my difference, 37%. So it's crushed. I mean, that's not even a fair comparison. The reason I think it's not a fair comparison is because every investor, or most investors, I guess, use the S&P 500 as their benchmark. So that's kind of like the well understood benchmark. I mean, nowadays NASDAQ is a little bit of a benchmark too, because it's just so consistently outperforming. But S&P is steadier, and everybody uses that. And it doesn't matter how much leverage you use to beat it. I mean, the more leverage you use, you're also risking, right, of blowing up your account harder. So I don't think it makes any sense to compare it to a leverage fund, especially one that resets daily, like the ones that are only available right now. And they don't function the way that most people think they do. They don't function in a very intuitive way. So those things lose value over time, no matter what, unless you have a very consistent run of daily outperformances. But the way it's structured is just not very good. Like I encourage all you to read up on the leverage funds and find out the exact mechanics behind it, because if you will lose money over time if you hold it for a long period of time. It's not meant for long-term investing. You can trade around with it on short term, maybe a week or a day, but I wouldn't keep it for a very long time because of the beta decay there. If you don't know what I'm talking about, I've done a video on it, but you could probably just Google it and try to do some research, and somebody may be able to explain it better than I can. All right, let's see. So that's that. When it comes to planning ahead, a lot of these options are going to expire, and I'm going to be sitting on some unused margin this weekend. And I'm actually kind of fearful of Monday. I mean, I know it's a very strong day, and it really matters how these last 30 minutes go. We got 23 minutes left, and it looks like, let's take a look at the S&P. It looks like the S&P is holding up, but the last 10 minutes kind of really matters. Maybe I should have done the video a little bit later so I captured those, but I want to see what the tell sign is for next week. But I'm a bit scared. I think that people are going to take some money off the table and reassess. With all these bad news and the market going up, it's a little bit of like, okay, what's going on? Who's right, the market or the news cycle? The data or the trader? So if I can use that. What else can I share with you? I've been doing a lot of like introspection about the mental side of trading, and I've been thinking about cutting out a lot of the buy side of the options, because my win rate is like 50% and probably overall losing money on these. So unless it's a leap, I think I'm gonna try my best to cut out a lot of the short-term calls. I mean, even recently I bought uh, energy fuels short-term call, maybe like 3-4 weeks out. I'm trying to capitalize on any kind of uranium spike that may happen, and I'm actually up on the position like 130%, which isn't like $17 or something. It's a small play, but I don't think that it's in my benefit to even do these. I mean, because the losses do stack up and it matters over time. I think I gotta stick to my guns and my play, and just try to be a bit more disciplined about how I operate in the markets, and really just view the lens through my strengths instead of trying to experiment, let's say, with things that I know that I'm gambling with, basically. Now that doesn't contradict the fact that I also believe in versatility, right? And the ability of approaching the market from multiple lenses to try to see it through one that is the most profitable at any given period. Like, I still believe that. I just don't think that I should be experimenting with skills that I've underdeveloped, and buying call options and put options at the right time and trying to time the market, something that I have no skill in. I'm just, I thought this week was going to be a bit negative. I definitely think the next week is going to be very negative. I wasn't right about this week. 50-50 chance that I'm right about next week. But yeah, it's just not in my wheelhouse. I haven't developed the skill. By the way, if you know anyone who's really good at market timing, point me to the right directions. I'd like to read up and brush up my skills there, but I just think it's just ridiculously difficult. Alright, so those are my thoughts on the mental side of things. That's what I've been thinking about lately, trying to really make my operation more efficient, trim some of the fat and some of the wilderness, take out some of the weeds, if you will, of the process, and streamline a little bit so I can really, compound the gains. So those are my thoughts. Let me know what you think about it. I'm curious, and also I'm curious about market timers. If you know a great market timer that I can watch on YouTube or listen to or read some articles or whatever, please let me know. And I've got a company request to review, so I'll be doing that over the weekend. Can't wait to do some company reviews. Haven't been able to do too many of them. I did like maybe one last weekend, but this weekend I want to do more. Actually, I'll be out of town, so won't be able to. Maybe on Sunday. We'll see. Alright, I'm gonna end right here. Hopefully, let's see where we're at. Okay, pretty good. Got 2 more days in the week to try to figure out where this market's going. But so far today's looking pretty good. Let's see the S&P 500 final look. It's holding and even ticking up a little bit. Alright, interesting. Okay, I'm gonna end it right here. Hopefully I'll make another video tomorrow. And hopefully you guys have had even more gains than I have. Peace out.